Hi everyone, welcome back to my channel. My name is Phi and this is Money Phi'losophy. Thank you for coming back for another day of Tesla technical analysis. Today we will take a look at Tesla weekly, daily, and hourly charts and project out the price target for the next few weeks. And also we'll try to figure out whether or not Tesla has hit the bottom or whether Tesla will continue to fall down in this coming week. We will also take a look at the overall market out there, especially the technology sectors. Among those were some of the most notable stocks that I usually talk about on this channel: Amazon, Shopify, Nvidia, and so on and so forth. If you are new to my channel, please consider subscribing. I am a growth stock investor and a trader, and I'd love to share with you my investing and trading journeys. Without further ado, let's get right into it. So as usual, we'll start with the daily chart. The volume for Friday was 117%, which was higher than average of the last 30 days. The volume seems to be half buy and half sell volume. The daily candle was an indecision candle, and Tesla is still now trading at below both 50 days SMA and 200 days SMA, with 50 days SMA being $934 and 200 days SMA being $911. The RSI had touched oversold condition multiple times last week, and as a matter of fact, as price action was moving down on a daily, RSI was flattened out, which also signaled a reversal. That doesn't mean a reversal is imminent. It just means that reversal is in the making. So I do think that this indecision candle on Friday is very important. We either see a continuation, which would get us to above 796 on Monday, or it could also be a sideways, another indecision candle, and then moving back up. If it cannot move back up from this indecision candle and fall back down, then that is an evening star, and that is very bearish, and we expect the short-term Tesla continues to move down further. For now, let's see where Monday will go based off of this indecision candle, and then we'll go from there. Let's go over to the weekly chart really quick to see what we're looking at here. So on the weekly, we see that Tesla had a very long wick at the bottom here. Had Tesla ended the week above 796, I would have been very confident, or better yet, if it ended the week around 820, then a reversal next week would be very likely. That said, Tesla ended the week at 769. So even though we have a long wick, it is not long enough for a confirmation that we will turn bullish next week. However, RSI is at oversold condition now. So the last time RSI on the weekly is this oversold was back in May of 2021. And that's where Tesla signal a reversal and start a bull run from May all the way to November of 2021. So I am optimistic that we are hitting the bottom, and we could potentially get back down to 738 one more time this coming week and then bounce from there. At least that's the hopeful thinking on my part, given the RSI being oversold here. One other thing to note was the week of February 21st. That's when the Ukraine-Russia war took place, Tesla hit the bottom of about $700. This past week, however, Tesla reached the bottom all the way down to $680. So that's definitely very bearish, and I'm hoping that Tesla will bounce from here. The overall chart here does look a little bearish with multiple top on the weekly, and it is entirely possible that Tesla will continue to move down. But in order for us to know that with certainty, we're going to have to see the next couple of days for confirmation one way or another. I lean a little bullish, and I think that there is a weekly gap from A40 to A60 that Tesla needs to fill in the next couple of weeks, if not the couple of days as well. Before we're going back to the smaller time frame for Tesla, let's go to the overall market, starting with the QQQ for the technology sector. I think that on the weekly, the QQQ looks to make a Really long wick here as well, which is always a good sign of a potential reversal. But for a confirmation of reversal, we need this coming week. Had the QQQ ended the week at around 308, it would have been a lot stronger of a signal for reversal compared to where it's at, but it's still a very good candle with a very long wick to the downside. On the weekly chart, you can see here the QQQ is oversold for about 3 weeks now. So the longer it is in oversold state, the closer it is to reversal, generally speaking. That doesn't mean that it will reverse next week, although the chance is high that it would reverse next week. I would also want to take a look. Actually, let's take a look at the daily chart for the QQQ for Friday. So QQQ made the bottom on Thursday and start reversing and then continued that on Friday. There was a little bit of a RSI divergence on the daily. So on the weekly, we had an oversold of RSI. On the daily, we have a divergence, RSI divergence. So all the signs lean toward reversal at this point. The volume was 94%. So we would like to see this volume a little bit more vigorously on Monday and Tuesday to confirm the reversal. Let's take a look at SPY. So I'm going to start with the weekly chart. Once again, very similar story. Last 2 weeks was bearish. Last few weeks was bearish, and the week before last week, it was also bearish with a long wick on the upside and the downside. This week, however, there's a very long wick on the bottom, and it is looking like a bullish hammer that is looking to reverse. Also, oversold for the last 3 weeks on the RSI here. Going into the daily chart, very similar to the QQQ that we just looked at. There's a little bit of a divergence as well. Divergence on the SPY is not as obvious as QQQ in my opinion, but there is divergence. And it is definitely a bullish candle last Friday. Although the volume was only 96%, but it is still pretty good for all intents and purposes. This is average of the last 30 days in volume. Let's go to Amazon. Amazon used to be my favorite investment and trading stock until Tesla comes around when it comes to potential. So I had reduced my holding in Amazon and moved it over to Tesla. However, Amazon and Tesla are still my biggest holdings, long-term holdings. Amazon had 108% in volume on Friday. The daily charts for the last 2 days were clearly bullish. The bottom that Amazon made on Thursday was $20.48, so $2,048. Amazon is right now below 50 days SMA at around 29.10, below 200 days SMA at 32.17, and definitely below even 50 weeks SMA. I'm sorry, 200 weeks SMA, which is almost 4 years average of Amazon. It is unbelievable how low it had moved, and to me it represents a really good opportunity to buy. Even on the daily, we had severe oversold condition over the last few days. Now let's take a look at the weekly chart. Weekly is definitely oversold, and if you look at the weekly candle for Amazon compared to QQQ and Spider, this is a green bullish hammer. It ended the week above where it started the week, right? So it started the week at 22.21. It ended the week at 22.61 with a very, very long wick to the downside, which is a reversal during the week. So in my opinion, Amazon is more likely than the QQQ and the Spider to reverse this coming week, especially after a very steep drop from recent high of 34.13 down to all the way to about 20.48. So Amazon, with this pattern, I'd say this is a very strong signal for reversal between RSI being oversold and this weekly candle right here. On top of that, we know that the 20-to-1 stock split is supposed to come on June 6th, which is only about 3 weeks from now. So I think the next couple of weeks, it would run into the date of split and then potentially retrace after the split. Let's take a look at Shopify on the weekly. Shopify has a very terrible weeks for the last few weeks or a few months. The high of it was 1762 and the low was about $300. So that is more than five times retracement. So I understand the pain of Shopify investor. We know Shopify is a hyper growth stock. So when interest rate increases, the present value decreases for Shopify. And that is a sad investment story here, but it is not over because I do think that it has signaled a very strong reversal as well. Once again, it was oversold from January even all the way down to March. It increased a little bit here and then start moving back down with an oversold showing up again for the last few weeks and then start moving back up. I think next week, both Amazon and Shopify should be reversing. On top of that, June 27 is the 10-to-1 stock split. So that could also be a potential catalyst. And I think that as traders, we could be taking advantage of Shopify both on the daily level as well as weekly and monthly level. So if you'd like more information about Shopify trade, comment down below. Shopify is probably among the top tradable stocks in my opinion. Let's go back to Tesla. So as you can see here, the weekly candle for Tesla is weaker than Shopify and Amazon, even weaker than QQ and Spider. So the reversal is not imminent or not even highly likely, unlike other stocks, but I think the signs for reversal is there, especially with the oversold on the weekly chart here. On the hourly chart, Friday was again a consolidation day with a gap up, but also indecision at this level, $769. For Monday, the pivot points are on the upper end, 804, the middle pivot point, 769, which is right where it ended the week last week, and the bottom pivot point at 751. Depending on futures, Tesla could easily gap up, hit the upper pivot point at 804 and then retracing. I expect that Tesla would either have a consolidation day, which is right around 750 to 770, or it would gap up in a big way and never look back. Going back to the daily chart real quick, the indecision candle here is very important. Tomorrow could be a confirmation of a bullish move, which means that it has to surpass $800 and potentially stay around $820 area for me to feel comfortable that it is resuming bullish, at least in the short term. The alternative would be another consolidation day. If Tesla moved down with a gap down and go all the way down to about $700 or below, that is an evening start and that is not good. The chance of that is lower in my opinion, given that every single index is oversold, but it is possible nonetheless. So as far as trading go, tomorrow if Tesla opens flat, I think it's a decent chance that it would spike further. And there's also a possibility that it would be indecision again or consolidation again. The chance of it falling in the macroeconomics environment of everything has been oversold is a lot less, but it is possible as I mentioned. So I would be betting on either sideways movement or spiking up tomorrow. So I'm hoping that Tesla will open flat tomorrow. If it gaps up, I would wait for it to retrace a little bit to either close the gap or close to closing the gap at open before entering a call option. And that would be my strategy. I would be looking at 2 to 3 to 4 weeks out because I am trying to catch a bullish wave within this coming week. So let's take a look at trading possibility. If I'm looking at June 3rd at the moment, that is 3 weeks from this past Friday. And at around $850 for strike price, that is about $2,100 for 3 weeks of time. And with the strike price of about $70 or $80 out of the money right now, which is not a bad odd, right? But 3 weeks is also a very short amount of time, and there is no catalyst from now until June 3rd. We know that the catalysts are as follow, aside from surprise news, obviously, but the known catalysts include early July for Q2 delivery result, end of July for Q2 financial release, and early August for shareholders meeting, where there might be some possible announcement and where the shareholders are expected to approve additional shares for a stock split. Either at that meeting or subsequent to that meeting, we should be able to see a stock split announcement by Tesla. That will propel the stock further. But right now, until June 3rd, if you're looking at a short-term play, there isn't a whole lot of known catalysts as far as I know. So because of that, even though the premium is very low, that is because of the expected low volatility. Now, if our prediction is correct, where we see a reversal and a vigorous one, then this is a really good deal. But if there is no volatility and Tesla moves sideways for the next 2 weeks, then this is obviously expensive. You have to lose $2,100 in premium value, right? If you are looking to play it safe, where you have a lot of catalysts to look forward to, I'd be looking at September. And with September, I'd be looking at a little farther out the money, i.e. $1,000. So roughly $4,900 for the strike price of $1,000, which is well below previous all-time high. And we have about 4 months out. So that is actually not a bad bet right there. It includes the upcoming earnings for Q2, which is also pretty good. So in my mind, those are the possible options, obviously ranging a few dollars in either direction in terms of strike price would be fine, right? So $9.50 to $10.50 would be fair in my opinion, and adjust the premium accordingly. So this is it for this video. Thank you very much for paying attention thus far. I hope you find the information helpful. Comment down below if you have any question, comment, or any feedback. Thank you very much for supporting the channel. I know it's been challenging for me to preparing videos more than 2 times a week for the last few weeks since I've been back to work 2 days a week in the office now. But I appreciate your support and I look forward to having more videos in the near future. Until the next video, bye.